It is Sunday. We are doing a review of what happened last week. So, last week was a very exciting week. It was a very volatile week, and it was a high volume week. For instance, on Friday, we had the almost the second highest volume ever. The highest volume was, of course, on July 4th. July 5th, we also had a lakh and 87,000 crores volume. And yesterday was also equal, almost equivalent to that. So, for all practical purposes, yesterday was the second highest volume. And the kind of volatility which we have seen is a sign of things to come. On one hand, you have extremely bullish participants who are buying at every dip, and every day the market opens with a big gap up, and then it gets sold into. So for 9 continuous days, we have had what is called as the red candles, which means the opening is higher than the close. So as I mentioned earlier, that we have seen this kind of a move in between December 2007 to January 15, 2008. Now, while we cannot predict that history will repeat itself, but there are signs that there are a lot of things which are common in between these two time frames, especially on the supply of paper. That time, the market had a excess of supply of paper vis-a-vis the Reliance Power issue, and then it started drifting down subsequently. This time, we've had a 43,000 crore FPOs slash IPOs in this 1 week, which is, I think, unprecedented. 43,000 crores, and we are talking celebrating when we see 20,000 crores in SIPs. So 43,000 is double of the monthly SIP, all coming within a week. And next week we're having some more IPOs and FPOs. And as I keep repeating, we are having approximately about 1 lakh crores of FPO slash IPO already sanctioned. So it's a matter of time before this number just keeps increasing. And if so much of supply is coming, from where is the demand going to come is what will be the question. Now, let me talk about the overall markets in tomorrow morning session. But today I want to focus on one very important thing. People like us who have been in the market for 30 years have seen a lot of insider trading and front running. Now, insider trading is something like, a company's insider knows some market sensitive information, and he goes ahead and buys or sells accordingly. And once the market comes to know, the market reacts in that direction, and the insider tends to make a huge profits. For instance, just before the corporate results are out, let's say an insider who could be close to the management, or it could be an employee close to the management, comes to know that their results will be spectacular. So all he needs to do is to simply go and buy in large quantities across various accounts with various brokers. And once the results are announced, the market comes to know, and the market prices shoot up. And therefore, this guy can actually offload. Now, that is insider trading. Now, there is something called front running. Front running is generally done among fund houses, which are basically mutual fund houses. So this week, for instance, Money Control has broken a story that Quant fund, there has been insider trading, and profits of minimum 20 crores have been found out. And SEBI has rated them on Friday at the Bombay headquarters as well as in Hyderabad. Now, it's early days, but the Money Control confirms that this has happened. So we will come to know as to the depth of this next week. It is pertinent here to remember that Axis Mutual Fund did the same thing. They had about 30 crores, and the fund manager was fined, and he was thrown out. But nothing more was done. But this concept of insider trading and front running is a bugbear of the markets all over the world. But in the US markets, it's much more tougher. So you can't get away. People like Rajat Gupta have been jailed because of insider trading. And here, front running happens all the time. But once in a while, SEBI catches to show that SEBI is not sleeping. Otherwise, it's fairly easy to understand and know that front running is there. It comes through the TV channels, it comes through WhatsApp groups, it comes through Telegram groups. It's very, very common, prevalent. That is why you will see mutual funds, by and large, do not beat the market, because everybody is trying to make money on their personal accounts. So how does it work? For instance, let's take a mutual fund. There is an investment management committee. They decide on what shares to buy or sell on a day-to-day basis. So let's say somebody from the investment management committee or closer to the actual execution, which is the dealer, comes to know that such an order is going to come. All he needs to do is activate his accounts across other brokers now, and then buy that stock or sell that stock as the case may be. So in Quant mutual fund, we do not know whether they have actually bought or sold in advance, what front running they have done. But nevertheless, let's assume that they have done front running of buying. So what the first step is, the investment house identifies the stock to buy. Then the dealer or the dealer's associate go ahead and buy it through some other brokers, and then so that they'll be taking a position. And the third and the fourth one will be where the fund house plays a large buy order, and then the market reacts. Market goes up. Then the fifth part of the formula, and finally the associate will begin to sell at those high prices and pockets a neat profit. And this goes on and on. Right? Same thing, reverse in case of selling. So this is what's happened. So I am generally very skeptical of mutual fund houses, especially who come and claim that they have made fantastic profits and their AUMs have grown, all that. So generally, there will be, as we always have seen, some skeletons in the cupboard. And sometimes the authorities decide to open the cupboard. This time, it looks like they open for Quant Mutual Fund. So it will be an exciting week as far as Quant is concerned. And what will happen, we don't know, because in the past, as I said, the regulator has not gone beyond a particular point because they don't want to spoil the investment mood or the investors' mood. And so they try to hush it up. So this time too, that may happen. But nevertheless, it will be an interesting week ahead. Next week is also the week where the parliament begins, which is tomorrow onwards, and the election of speaker, which is on 26th. As of now, there seems to be no problem for the BJP. They may get their speaker and their deputy speaker. So it everything may go off smoothly unless there is a last minute hitch. Right now, everything is looking smooth. So that news we will see if there is something changing over the next week. I will be anyway covering it on a day-to-day basis. But suffice to say that this week has been extremely volatile, plus a very high volume week, which is to be, and the third and the fourth highest volumes have also happened during this week. So extraordinary volume, extraordinary supply, an extraordinary amount of positivity, but the market is not moving. In fact, Nifty has moved only 0.4% through the week, and all because of the upward gap up every single day. We don't know whether it will happen on Monday or it could be a gap down, but we need to be watchful. For me, Nifty at 23,200 will be a very strong support band between 23,200 and 23,400. I would like to watch it at that time and then take action. Right now, you can buy on dips till 23.2 breaks. If 23,200 doesn't break, then we are in for a higher number as time goes by. If 23,200 conclusively breaks, then I think all bets on the bullish side should be off as far as my analysis is concerned. However, I'm not a SEBI registered advisor. I'm just an investment analyst, and having had experience of more than 30 years, these are my thoughts. So if you like this kind of thinking, kindly share and subscribe, and please spread the good word around. This is Vijay here, signing off. Have a nice weekend. Thank you.